Welcome to my channel, Big Check Energy. If you've been here before, it is a pleasure to have you back. If this is your first time, I do not know how you found me, but I really appreciate it. Feel free to like and subscribe. Okay, so I'm here to talk about everyone's favorite time of the year. And no, I do not mean the holidays. I'm talking about open enrollment, okay? Just a little corny HR joke. We love open enrollment. That is a lie. But open enrollment is important. And so I wanted to come talk to you about some very important things that you need to know when considering what plans you want to select for next year. Because just remember, what you select now is what you will have for the next year, unless you experience what's called a qualifying life event. So, for those of you who are not familiar with what a qualifying life event is, that is when you experience a life event that is so significant that it opens up a 30-day window for you to make changes to your benefits outside of the open enrollment period. So that would be events significant such as having a child, adopting a child, having custody of a child, court order. So even if you don't get custody of a child, let's say you are getting divorced or you are unmarried, whatever the situation may be, your significant other or former significant other can ask the court and say, hey, we're not together, but they need to put this person or they need to put our children or child on their benefits, not on mine. A court could say, yep, you have to have that child or those children on your benefits. And so you would then receive paperwork saying that that's part of your court order, and we would be able to reopen the enrollment window for you for a period of 30 days from the date that is stamped on that letter. Like if they say as of January 1st, you have to put children on your insurance, or March 27th, you have to put the children on your insurance, then we would take that information and we would reopen your enrollment period. Also, qualifying life events could be something like getting married. I think I mentioned getting divorced already. Anything that is significant enough, but there are very strict rules around it. It's not like, oh my gosh, it's my birthday, I need to pick different benefits. That's not how it works. Also, things like your domestic partner or spouse loses their job. If they lose their job and their coverage through their employer, that opens up a period for you as the employee of your own company, because then you would be able to put them on your coverage. That's still a qualifying life event. Loss of coverage is a qualifying life event. Okay. So I want you to be mindful of what you're selecting for 2023, because there are some things that are going to be changing. We don't know what's going to happen with contraceptive services and devices, birth control, things of that nature. Who's going to cover what and why and when? They could roll it back. As we saw this year, some things got rolled back. So I want you to pay attention to your plan, what it covers, what it doesn't cover, so that you can make an informed decision. Here's something else I want to point out to you. The IRS actually rolled out that they are increasing the limits that you can contribute to your FSA plan and HSA plans. Now, if you don't know what those are, let me tell you. So an FSA account and an HSA account, they work very similarly, but the rules are a little different. An FSA account is something that is tied to your employer. And usually what they do is they front load the amount that you can spend on eligible expenses. If you're unsure what you can use your FSA account on, you want to go to a website like the IRS, they have a page about it. Or you can make it easy on yourself and go to FSAstore.com. That is an online retailer that specifically only includes items that are eligible for your FSA and your HSA. It's almost like that website has two sides, okay? You just have to know which type of plan that you have, and then you can click on the one that applies to you. So that account is something that you put money into pre-tax, which means it lowers your taxable income and saves you some money on the long run. Now, let's say you have a plan that has a deductible of $3,000. Next year, the IRS says that you can contribute, if you're an individual, up to, I believe, $3,050, which is more than the $2,800 and some odd dollars that you could for 2022. It is an increase of 7% for 2023. I strongly suggest, if you know that you're going to have some medical bills or some out-of-pocket expenses, go ahead and try to max out that account every year, right? Let's say you're a woman who knows that you're going to be seeing your lady doctor multiple times next year, right? Maybe you've got a procedure you need to get done. Maybe you've got special testing you're going to get done, things that are outside of, let's say, your just normal scope of care, or you're anyone who's going to be seeing a specialist. Specialists tend to cost more money. The copay is higher, and those bills that come from the lab work, those are always higher too, because they always want some special labs, right? If you participate with either the FSA or the HSA, you can have that money already ready to go. And that way, when you get a bill, you're not like, oh my gosh, now I got to pull this money out my check. This money is pre-tax, set aside, and then you can go pay those bills and know that that money's already sitting there. So it's almost like you're just taking your money, but just saying, I will only use this money on these types of expenses. The IRS will not tax you on that money. Now, if you mess around and try to use that money on something you're not supposed to, they will come for you. So don't do it. Abide by the rules, abide by the list of things. It's a very extensive list, and you won't have any problems. Now, whatever FSA company your employer has, they can and will ask for receipts. These companies are audited as well by the IRS, and they want to make sure that they're doing what they're supposed to do. So don't get mad when the company asks you for a receipt. Like my company uses Fidelity. Fidelity asks for receipts. Just don't be upset about it. There are other companies like Paychex. Paychex absolutely ask for receipts. They pretty much want every single receipt for everything that you purchase. So don't throw them away. Go ahead and submit them just to make your life easy. But the focus is that you get to use your money in a smarter way so that it works out for you in the long run. By lowering your taxable income, you're saving yourself money. And that's what we want to do. We want to maximize our earnings, and we want to make sure that we're making smart decisions, especially as we're going into Q4 and rolling into 2023, because we don't know what's happening. It's a free for all. Now, like I mentioned with the FSAs and HSAs, the limits for those are going up by 7%. 7% is going to be the magical percentage this year, I've gathered as of today. Because something else that's going up or adjusting, not necessarily going up, something else that's adjusting by 7% are the tax brackets. You know, those pesky tax brackets. Like if you're one of those people who gets paid on a cusp and you get that pay increase and you're like, yeah, I'm about to make more money. But then that more money, you get pushed into a new tax bracket and you feel like you're actually bringing home less than you were before. Yeah, that happens. It's really annoying too. They're adjusting the tax brackets for 2023. I'll put the link for the article below so that you can be aware, okay? So you want to know how far your money will go and try to predict how much you can take home. The IRS also has a tax estimator on their website. Now, how great it works, but you can go get an idea of how much of your check you actually bring home. So you want to start making decisions based about how much you're saving, how much you actually pay towards your benefits, how much you want to put aside. You know, go ahead and use the tax calculator on the IRS website, and then you can make very informed decisions. Now, I want to tie this back to the benefits that I started with. You don't necessarily want to just jump and pick the cheapest plan coverage available to you if your company offers multiple plans, because you can end up spending more in the long run for less coverage. You know, the cheaper plans tend to be the high deductible plans, but you have to have a high deductible plan in order to qualify to have an HSA, which is a health savings account. Again, similar to an FSA, but it's not the same thing. So you just want to make sure that you are looking at what's covered, what's not covered. Do you have any medications that are considered specialty medications? That sort of things, because they cost money. Medication costs money. If we didn't know, the pharmaceutical industry, they making bank. Okay. So make informed decisions. Any special medications that you take, go ahead and see if you can look up on your provider, your carrier's website, and see what tier those fall into. They can change those tiers like every quarter. It doesn't last the whole year sometimes. So sometimes you'll be on a medication and you'll get a letter in the mail that's going to say, hey, this is now considered a tier 2 medication. And usually what that means is you've got a higher out of pocket. Kind of sucks, but that's the way things work. It's not year by year when it comes to those medications. They could change it multiple times a year. I may bounce around a little bit, but just stick with me, okay? My brain does that. So if you've never contributed to an FSA plan or an HSA plan, find out which one you are eligible for with your employer. And this may be the year that you may need to start contributing, because it's going to save you money. And I want you to be ready for those out of pocket bills, for those lab bills, for those medication bills. And we know every doctor's going to take their copay, right? So just look and see how much you spent in 2022, the types of claims you had in 2022. So just look and see how much you spent and then think about it. Nothing goes down when it comes to healthcare. It's only going to go up. It's only going to go up. So take a look, try to make an informed decision, do some math, make sure things make sense and that the math is mathing, and just actually consider contributing to your FSA account or HSA account. But that's it for me today. I appreciate the watch, and I will see you in the next video.